as well joins in on the show right now. Jonathan, hi, afternoon. Good to have you on ET now. Just as that artist and expert was highlighting right now, all the triggers are not exhausted, nor are all the sectors. Reason to believe that the bull market is very much intact and is still in a young phase here in India?
Yeah, look, I've got to admit, a few months back, I was thinking India would head a little lower. So these new highs have caught me a little bit by surprise. But I think, as you've been commenting on, the valuations are still pretty decent. India, from an investment destination, still looks very attractive. And yeah, obviously, you've got great companies and the market can drive higher. But like we're seeing in a lot of other markets in the world, it's not across the entire market that's going up. You have to be very specific in the sectors and the companies you're looking at. But overall, yeah, India looks pretty good here.
Is it absolute or is it relative?
Both. I think both. Is the absolute valuations, as you were highlighting earlier, there's nothing too excessive there. And on a relative basis, particularly when you're comparing India, vis-a-vis to China, yes, it's substantially more expensive. But there's a number of headwinds which China is facing, which India currently isn't. And so it's difficult, on a relative side, where I had previously thought that we'd see some continuation of flows out of India into the likes of China. That obviously has not played out, and it's difficult to see, other than a short trading, perhaps burst, that sort of playing out on the medium term. So I think the outlook for particularly foreign investors when they look at emerging markets, India is certainly and has been one of the standout emerging markets and will likely continue to be going forward.
Then I was looking at some data, which is that if you look at the last 12 months or even last 24 months of net FI activity to India, it's negative. Now India has become the toast of the town. Everybody wants to invest in India, yet the total FI positioning in the last 12-24 months is negative. Do you think that itself is a reason to remain bullish on India? Because even if FIs, they come back and they normalize their India position, looking at the relative appeal, we could be looking at $3-4-5 billion coming back into India?
Yeah, I think you've got to put that in context. Over that period, we've had excitement about China opening up. India had previously massively outperformed China already. So I think the FIIs were considering to, shift some cash out of India into China. In addition, we've obviously had the whole Adani issue, which has certainly, put a few FIIs off over the overall market. If they're not that knowledgeable about India, that might have been a bit of a headwind for India as well in that period. So it's not surprising some of the money, did flow out. But obviously some of these issues have calmed down. The China story, as I've just mentioned, still remains complicated and difficult. So I think we could easily see, if investors believe the dollar is going to turn, the US dollar is going to turn, and they want to increase their allocations to money, so for example, outside the US, then the likes of India probably will benefit from those sort of flows. So you could easily see that money coming back.
And that's the thing, right, that you highlighted.
Conversation with Jonathan, Schiessl and Kunal Bothra to understand trends and where things are headed in terms of the market setup. Jonathan, at what level you would say, I want to take some chips off the table? I mean, I like the market, but for me, it's about risk management. It's also about understanding, my portfolio spread. I will take some chips off the table. That could be 5%, that could be 20%, that could be 15%. But what is that point?
I think, for me, new highs are really a positive technical signal, but it is not really particularly important. I think the key, as you highlighted earlier, is valuation. And when things start getting extremely overvalued, then obviously markets are pricing in a very rosy outlook far into the distance, which, as we all know, quite often is very difficult, doesn't quite pan out. So I think then it becomes prudent to, if you need to take short-term positions, then maybe take a bit off the table. Obviously, like you were highlighting earlier, the SIP side, the regular payments into markets, long-term savings, then really you shouldn't concern yourself too much with short-term overvaluation. That's what happens in markets. They, from time to time they get very expensive. From time to time they're cheap as well. But obviously, if you're after a compounding story which India offers, then for a long-term investor, it pays to not get too whipsawed around these short-term issues. But obviously, short-term, yes, that there are signals which can indicate the market's a bit frothy. We're not there yet. And if you are concerned, then yes, it pays to take a little bit off the table. But I think obviously valuation is the key.
Top three holdings, what they were at the beginning of the year, what they are now, and what they could be at the end of the year.
Yeah, I mean, obviously most of our India positions are in a sort of a focused portfolio, so we haven't got a huge amount of names currently. But we haven't really done a great deal of activity. I have to admit, we recently sold L&T after a very strong profit on that position. I was just a bit worried that a lot of good news is probably factored into that share price in the sort of short to medium term. Brilliant company, a lot of great outlook, but I think valuations are getting a little bit stretched according to us. Otherwise, I would agree with your earlier comment. The sectors that we have good positions to remain IT and the private sector banking stocks as well, which I think I would totally agree that they look like they, India ultimately, banks and particularly the private sector banks are great ways to play a broad-based India, the India story. And so for India to carry on moving higher, I think that sector needs to fully participate.
But as I said, that it could be a bit of a, all of these churns, they play part and parcel in terms of a trend, because there are bound to be sectors and stocks which run up, lead the rally, then they consolidate, and then the other laggards, they make a comeback for themselves. So I believe that we could be probably into a phase where many of these sectors, like maybe NBFCs or mid-cap index as such, they could be taking a bit of a pause.
Okay. Jonathan, walk us through your top three holdings, what they were at the beginning of the year, what they are now, and what they could be at the end of the year.
Yeah, I mean, obviously most of our India positions are in a sort of a focused portfolio, so we haven't got a huge amount of names currently. But we haven't really done a great deal of activity. I have to admit, we recently sold L&T after a very strong profit on that position. I was just a bit worried that a lot of good news is probably factored into that share price in the sort of short to medium term. Brilliant company, a lot of great outlook, but I think valuations are getting a little bit stretched according to us. Otherwise, I would agree with your earlier comment. The sectors that we have good positions to remain IT and the private sector banking stocks as well, which I think I would totally agree that they look like they, India ultimately, banks and particularly the private sector banks are great ways to play a broad-based India, the India story. And so for India to carry on moving higher, I think that sector needs to fully participate.
Jonathan, at a time when global investors like yours, they have option to buy NVIDIA or buy anything which is in the AI space, is there a temptation to buy Indian IT services, because these businesses are growing at 8 to 12% depending on the company you track or you own, and these stocks are available at the P multiple of 15 to 20 or even 18 to 25 times depending on the stock we are referring to. They're good companies, Jonathan, but the growth has moved from Indian IT services to some other part of IT chain.
Yeah, look, I think you're right, and certainly I think AI will benefit these IT service companies a lot going forward. But clearly, 20-30% growth rates and some of the growth rates that you can pick up in obviously some of the more core focused AI plays, you don't get that out of Indian IT companies anymore. But that said, they are definitely a beneficiary of that trend, and it just makes the outlook for growth more certain going forward. But yeah, they're not going to be very very high growth rates going forward, but they still will be benefiting from the overall trend.
Okay, Indian Hotels up, NTPC up, Intellect up. You've got a smart price action in pharmaceuticals as well. But the stock which has done the best from the COVID low, and that's what we are looking at for benchmarking purposes. Starting point of its COVID low is actually Tata Motors, 7x. The other stock which has underperformed and has not given great returns. When I say great returns, look, Nifty is up 150%. So anything less than that, that means you've underperformed the Nifty. This year Tata Motors is up 50%, but this is one stock where the bottom wall got knocked out. The market cap had plunged to some 30,000 crore. It had gone below 100 rupees also. That's Tata Motors this year, but from the COVID low, it's been an extraordinary cheap stock. Jonathan, it's a company which has got presence in your part of the world. And the streets of England now have a lot of Rover and even Jaguar. How do you visualize Tata Motors as a company moving now?
Yeah, look, as a foreign investor, it's always a difficult one to play, because you've obviously got the international business, the Jaguar Land Rover business, which has had its moments in the sun and obviously other times when there are serious problems around the company. And then you've got obviously a domestic business as well, and you've got to factor in which is driving the share price at any one time. I think, clearly Jaguar Land Rover has had its time in the sun. More recently, things are, we're looking a bit dicey again. They're a little bit further behind on the whole EV side compared to some of the other, European car manufacturers. And obviously, I'm not talking about Tesla or some of the Chinese as well. They're certainly looking a bit far behind on that. There's obviously a lot of rumors about huge investments in battery factories in the UK or Spain. So that is still a very capital intensive business going forward, and they still haven't really got, to my mind anyway, the scale to compete going forward. They have some lovely cars, absolutely, but it's still a pretty small player as a standalone business. But obviously, it's not a standalone business, and it's part of a larger business with a very large Indian base as well. So it's not a company which we've looked at for some time. We try and, the cyclicality of earnings is something which we have a slight problem with. We try and go with a lot more compounding type names where we're a bit more confident about the earnings outlook going forward without that huge cyclicality that Tata Motors does enjoy.
Okay, Jonathan, great to have you on the show. We'll let you go on that note. Glad you could take time out.